it comes to investing, waiting for the perfect moment or perfect timing of the market is big scam. Anybody can invest with any amount. If you can spare 10,000 naira every month, then I'm going to teach you how you can start investing like a professional investor using the dollar cost averaging method, so that you will stop wasting your time waiting for the perfect moment or perfect timing to enter the market. So what is dollar cost averaging? Dollar cost averaging is a method of investment that you dedicate a specific amount, for instance 10,000 naira. You dedicate this amount at regular intervals for your investment. So what I'm trying to say is that you can say, okay, I have 10,000 naira, I have 5,000 naira every month that you can spare for investment. So whether the market is high or low, that 10,000 naira you must invest with it. So this method is very good as a beginner because it helps you eliminate this perfect time to enter the market or the stress of having to think about which one to buy, the specific amount that you will use. It helps you with all of those stress. So you know that this every month I invest 10,000 naira. So that is what dollar averaging cost is. So for instance, you have 10,000 naira. I want to buy Dangote cement for 500 naira per share. So that 10,000 naira, when the market is low for 500 naira, you're going to buy 20 shares of Dangote cement for that 10,000 naira. Then when the market is high, with that same 10,000 naira, because it is a specific amount that you invest every month, maybe when it is, let's say the market is high for like 1,000 naira, you're going to buy just 10 shares of Dangote cement. So that is what dollar cost averaging is. Just to dedicate a specific amount and then you use that amount to invest, whether the market is high or the market is low. Do you understand? So how can you start investing? So let's go straight to the point of investing your 10,000 naira using the dollar cost averaging method. There are basically 3 steps that you can follow when it comes to this method of investing. Number 1 is choosing your platform. When it comes to the platform, it is important to choose a regulated platform, especially the platform that is regulated by the Securities Commission Exchange of the country. So this platform makes sure that the platform is regulated, it is legal, it is genuine and guaranteed. Do you understand? So it checks all of those things and they authorize them, they license them for people to use and invest. Do you understand? So when it comes to platform, I would highly recommend Piggyvest or Cowrywise. So as a beginner, I would advise you use Cowrywise for mutual funds, or use Bamboo or RiseVest for your US stocks investment. Step 2, set your target fund. As a beginner, I would advise you go with the money market mutual fund, or you look for balanced fund. There is also equity fund. So the money market mutual fund is majorly bonds, fixed deposits, treasury bills, and less of stocks. Then the balanced fund is basically stocks and bonds. So it is good for growth portfolio. Then you have equity fund that is majorly or 80% stocks, which is high risk. It is very, very risky for the equity fund, and you being a beginner, you don't really know how to manage your risk level. Some persons don't know their risk level. Are you the person that has high risk or low risk? If you don't have high risk, please don't go with the equity fund. And if you have a medium risk, like it is not low and it is not high, just go with the balanced fund. And if you have very low risk that you cannot watch your portfolio go red and go green again, please go with the money market mutual fund. Do you understand? So this is what you need to do. So you go to your cowrywise. We are using cowrywise. Let's go straight to my phone so that I'll show you how you can do that practically. So you go to your cowrywise. After you go to your cowrywise, you sign up. If you've not signed up with them, you sign up, fill up the KYC, that's know your customer. They will ask you for your NIN, your BVN, your account number. They ask you for a passport, just so they will know you and verify that you're a real person. So after that, you open the account with them. When the interface is up, you go to the invest. You go to invest and you will see mutual funds. When you go to mutual fund, you're going to see manage portfolio and other type of mutual fund. So when you click on the mutual fund, you're going to look for where there is money market mutual fund. Cowrywise also has a mutual fund that is managed by them. Do you understand? It is 100 naira per share. So you can decide to invest with the Cowrywise mutual fund, or you're going to invest in the equity mutual fund, or balance mutual fund, or money market mutual fund. Do you understand? So it is very easy. Step 3, automate your investment. This is the most important part when it comes to DCA, that's dollar cost averaging. So you automate it. How you automate it is you go to the automate, you fill in your bank details, your card, input your card. This will help them to ease the automation process. So they will ask you how often do you want to be investing this amount. So you can decide to invest monthly, weekly, every 2 weeks, anyhow you want to invest. So you're going to put every 1 month, or every day, or every 3 days. You're going to put the amount, 10,000 naira, and then you click on automate. They are going to confirm that it is successful. Then you are done with your automation process. So that's basically how you can invest with 10,000 naira using the DCA method. You might say, oh, it's not just 10,000 naira. I can use the 10,000 naira and braid my hair. No. What matters is that you allow compounding to do the work for you. So what it means is that if you're investing 10,000 naira every month, in a year you invested 120,000 naira. If your interest is 15% per annum, most mutual fund is actually up to 20%, especially if it is Stanbic IBTC, or 18% for Cowrywise mutual fund, because that's what I know. There are also mutual fund like the equity mutual fund gives you up to 40% per annum. So if it is a mutual fund that is 15% per annum, at the end of 1 year, your money will be worth 138,000 naira. Yes, the money is small. I know the money is small. But have you heard of compound interest? Compound interest is your interest earning another interest. Do you understand? So 138,000 naira, if you allow it to stay there at that amount, at that same interest, and as you're still investing 10k per month, at the end of 10 years, you will not believe how much you would earn. Yes, so that's how it works. It's not about, oh, I invested 1 million naira today and the next month I'm making 10 million naira. That's basically gambling. It's not sustainable. So for investors like you need to be consistent with your investment game. If this video helped you, don't forget to subscribe to my channel, and also check out in the description. You will see a link that you can join my WhatsApp group where we learn about investment and grow our money together. Bye. I cannot wait to see you at the top.